Hey, welcome back to the Hub channel. My name is Brandon Burton, and I am joined by the one, the Rob. Now, Rob, obviously, you know what's happening in the market right now. We have it's exploding over 30,000, but I know you don't want to talk about that much. What is happening in the market right now that you want to talk
Hi, Brandon, and welcome everyone to our live show where we look at the stocks that you have of interest and taking a look at where we are in the market. As everybody can see that's joined us. And by the way, apologize for missing the past 2 weeks. So hopefully there's a lot of good questions, and hopefully people are still viewing. Didn't mean to do that, but had some conflicts come up, but we will be here on each and every Friday. Looking at the market, you can see clearly that we have a downward move today, a gap to the downside here, which is problematic from a couple reasons. One, the fact that we're continuing to move lower, but the second part is the fact that it's a gap down. So now we have to wonder, all right, do we continue lower from here without coming back to fill the gap right away? Or do we just continue on down and fill the gap at a later date? We have all of these zigzags. As all of our listeners know that have been around for a while, I'm a huge zigzag fan because they just work so well. And the interesting thing here is we came down to the 100% extension. That's what was supposed to happen. That happened. Then you look to see, are we going to have an extended C wave, which would bring us down to 410 on the SPY. And based on Elliott and Fibonacci rules, if you're going to have an extended wave, meaning that you're moving past what was already expected, you likely move back up and test the previous fib level, which we did, and the highs for a week hit that 61.8% level, which also happened to correspond with a 50-day moving average, and now we're moving lower. So what that means in normal terms is that there's a better than average chance that we are coming down to 410 on the SPY. We'll see how the market closes. As those of you that have been watching us know that when we do this show at 2 o'clock, it just seems like every time we do this, things change significantly between when we talk and the close. So it's going to be very interesting to see where we go into the close. But for now, not so good. Powell spoke yesterday, and if you watched the intraday market yesterday, it was volatile. It was just crazy back and forth on every one of his comments. And people, it seemed like the market really wanted to try to rally, but he just wouldn't give them enough. And the bottom line, I think what broke it, because there was some rally attempts while he was talking, but when he said that the Fed was committed, in his words, committed to the 2% level of inflation, that just seemed to break the back of the market. Just to give you a little bit of context here, back when we had Greenspan, this, going back to the Greenspan days, which tells you my age, he would talk about how on average inflation was at 3%. And so you had to earn better than a 3% return to outpace inflation, and that the Fed's mandate was to manipulate, that's a bad word, but to adjust money supply through easing or constricting. We're in a constricted period on the money supply, but easing or constricting to keep inflation around 3%. Well, now we have Powell and his Fed that wants to get it down to 2%. And there are a lot of people out there, some a lot smarter than me, that feel like that's just not feasible. So the problem comes if they really truly are committed to getting it down to 2%, that is really restrictive as far as money in the market, and liquidity is what drives the market. So if they're going to keep the liquidity that restricted to try to get us to 2%, it's hard to envision a bullish scenario in the market under those terms. And I think that's what happened yesterday when the market reversed and headed lower. And then we're getting some follow through today, which I thought was going to be really interesting to see how we moved into the weekend. Then we add in the conflict in Israel and all of the talking heads, China, bad mouthing us, and that we're friends with Israel and Israel's going too far, and just there's endless scenarios piling up on the bearish side. If you're bullish, the one thing that you can hang your hat on, I think, is the fact that there are a lot of things piling up on the bearish side. And if you've been trading long enough, you know that when everybody views the market one way, usually the market goes the other way because that's the path of least resistance. And so that could be the one catalyst that drives us back to the upside. Other than that, Brandon, I can't come up with much on the bullish side. So that's a quick update on the market. Hope everybody's doing well, and love to answer some questions if we have some.
Yeah, let's check this out and kind of what you're talking about. We have so many bearish signs and so many things going on in the market right now. And even that, the graph that you just had up, that stock chart, the downside potential on that is far outweighing, I think, the upside potential there. It looks like, looking at the bottom of those Fibonacci lines, oh gosh, I think 410 could really come into play right there on the S&P, but who knows? We'll see how this plays out. But yeah, we do have a couple of questions from the chat. The first one that I see here is from Lisa. Let's take a look at UPST.
Okay, sounds good. And I do think you're spot on there, Brandon, with everything that you just said is right on cue. All right, so let's take a look at UPST. And, everyone that's been watching, Brandon, you know this as well. I don't like it when things go vertically up. And oftentimes when things go vertically up, they come vertically back down. And so that's exactly what happened with UPST. And then we came into an area where you thought maybe we could find some support right here in this 30 range, but we didn't. We broke below it. We've been testing it a couple times. It seems to me pretty clear that we're going to go down and test 20, and then we'll have to wait and see if that can hold. If it can, maybe we can get a bounce from there. If we don't hold that, then we're looking at coming down towards at least not all the way down to 10, but somewhere in the 15 range would be the next area. So the bottom line here is it sure seems like UPST wants to test 20, and once we get there, take a look at it again and see if we can get some sort of a bounce from here. Otherwise, we're probably looking at moving down to 15. So, I wish I could give better news if you're bullish, if you're wanting to see it reverse back to the upside. I don't see it right now, though, unfortunately.
Yeah, interesting looking at that chart there. Gosh dang it. Okay, so let's take a look at our next one here. Let's look at UNG. Ren wants UNG. Oh my gosh. Let's check that one out.
Yeah, and I'm glad to hear people are back on that, because I was looking at that for quite a while. And, we can't find a break above 8. When you look at this chart, so badly want to go long. I've been watching this for so long and so badly want to go long UNG. We're moving into winter time. As everybody can see from the background, I'm still up in the mountains where it gets very chilly at night. Nice during the day, but very chilly at night. So we are clearly moving into the winter season, which is normally kind of bullish. But for whatever reason, we can't seem to break that 8 barrier. If we get above 8, we have a little resistance there at 9. But if we can break above 9, so 8 would be a little bit of a trade. So it'd be a short-term trading opportunity, because we're probably, if we break above 8, going to run to 9 very quickly. But if we could somehow get above 9, then you could have a really good move to the upside here. I mean, you go back and look, the move down from 20 was so quick. and vertical, and that works both ways. And we just look at that UPST chart where we had a vertical move up and we came vertically back down. It usually moves the same way if you have a vertical move down. You get a pretty quick move back to the upside. Hasn't happened so far. So it does feel like at some point we could get a bid in UNG. But again, to summarize, I think there's a trade from 8 to 9. Then you have to look at it. But if we could somehow get above 9, then we'd take off. But for whatever reason, it doesn't want to do that. And UNG does incorporate some oil aspects as well as natural gas. It's not only natural gas if you take it apart and really look at what's included in there. But gosh, it doesn't seem to be helping it too much when oil is moving to the upside, but UNG is not at all. So this, how many months have we been between this level of 6 and 8? It just seems like forever. But that's where we are. I feel like I don't really even want to try the move from 8 to 9. So I'll be watching this, which I do every single day. And if we can get above 9, look, we did one time back here on the 3rd of March or the 4th of March, and no follow through. You've learned hopefully from watching that one day means nothing, and that's a perfect example of it. 3rd of March. You have to have a second day, a follow through, a confirmation day. These are head fakes and they suck people in. And that's exactly what happened back then. So we need to have a break like this with follow through. And then I think we have a trade. But until then, I think we just have to keep monitoring UNG and wait for our opportunity, because every time you look to step in, it wouldn't have gone well. And so disciplines have shown over time, don't try to be early. Don't try to be the first one. The whole early bird catches the worm doesn't really fly so much in the world of trading. So that's it. 8 to 9 is a maybe short-term trade, but to really be serious about it, we got to see UNG break above 9. Why it's not doing it? We're about to move into November. I haven't looked at a lot of people still look at the old Farmer's Almanac for forecasts. I don't know if the winter is forecasted to be. I know in Florida we had an unusually hot summer, and sometimes that plays into a cold winter, because everything goes in extremes. You go extreme one way, oftentimes you correct extreme the other way. So it wouldn't surprise me if we do see a colder than expected winter, and maybe that gives us an opportunity there. But anyway, a lot of commentary for a stock that doesn't really do much. But hopefully at some point we get a nice bid here.
Yeah, I've heard about those hot summers in Florida. I don't know if you've heard this before. I've heard guys pass out on the golf course. It gets so hot there in Florida. It's super strange. But anyway, we have another comment here that wants to, let's see, who was that? It was Will. Want to know about Nvidia. Where's Nvidia at?
Nvidia is really interesting. Glad you asked, Will, because I'm dying to show this chart on top of it. Scary thing here, and I think this is scary for the market in general, for people that maybe not even be so into Elliott Wave or the zigzags and stuff that we watch, but a lot of people are familiar with this pattern, which is the old classic head and shoulders. And so you can see it is pretty darnly well formed, left shoulder, head, right shoulder, with that neckline right at 420. We're trying to break below that, trading at 417 at the last update on the chart. We do have a tiny bit of potential support right here around the 400 level. And maybe we can somehow find, nothing's 100%. Head and shoulders patterns work a lot, but nothing works 100% of the time. But if we do break, and it doesn't have to be 420, you could be aggressive on a break of 420, but the real move is if we break above 400. And on the head and shoulders, you measure from the neckline to the top of the head, and then you look how far that was price-wise, and that's the same price level you're looking for a downside. And look at that, Brandon. It just kind of plays out that if we were to move lower there, then we come down and fill this gap all the way down. Can you imagine Nvidia all the way back to 320? Part of another reason I think that could happen is not just this head and shoulders pattern, but people have done really well. You go back and look at Nvidia, institutions that have held it. We had that run from last October, so an entire year run going all the way from 100 up to the 500 level. So that's a massive move. So even a break back down to 320, when you put it in context, is as bad as that may sound right now, in the grand scheme of things, it's not that big of a corrective move. It still leaves you with a heck of a gain. But what's going to happen is if we start to break, and I'm not the only one that can see these levels, institutions can too, but if we start to break below 400, then I really feel, just my opinion, that all those institutions are going to bail because they're going to want to lock those gains in. They're not going to risk the move down to 320, and that's just going to exacerbate the move and help it to happen a bit quicker. So I think we are in that old analogy that I use of, fingernail hanging on a cliff. That's where we are with Nvidia. If we can bounce somewhere between here, between 400 and 420, and bounce back up, it could negate this, but that's a pattern worth watching and potentially wiping out some of those big gains on Nvidia. Obviously, the rest of the market would be under some serious pressure. The old adage, the generals fall last, and certainly Nvidia has been one of the generals, and that's just the leaders of the market. So if we lose Nvidia, then that means that there's a lot of ugliness in other places in the market, Brandon.
Nvidia is so unique in that it's probably one of the most prime positions in the Web 2 world to monopolize on this AI play coming up with their chips and things like that, which is obviously a little bit priced in at this point. You would have to assume that that's priced in, and maybe a little bit too much, where it shot up to that above that $1 trillion market cap and where it started to take over. So your play, it still is very possible for it to drop and fill that gap, I think, and it could do that. So that's a good assessment on your part. Let's cover this last one here, and this is a good one. I was hoping this would come up today because we saw what happened, and we saw kind of the makings of this, and Will sadly sold his puts right before earnings, but he wants to talk about a couple people want to talk about Tesla. Where's Tesla at? What do you think is going to happen there?
Oh yeah, gosh, we had some people last night in our insiders meeting. They got a little bit bold, and don't recommend this, but they got a little bit bold, and they happen to be on the right side of it. We have subscribers at evotrader.com over on the Evo channel, and I was talking about this really well-formed triangle that we had on on Tesla moving into earnings. And if we put the earnings report on, of course, everybody knows what happened with earnings, and there was the move lower. And one of our subscribers just bought puts. Normally, when you see a triangle like this, based on Elliott and his own rules, would say, don't do that. When you have a triangle that's that well formed, it can break either direction, and you want to be covered on both sides. And in this case, broke to the downside. So, gosh, Will, sad to hear that you did sell out of your puts beforehand. It was going to be interesting. And if you watched after hours, so back up here, we've talked about this, Brandon, back up here in this earnings report, I tried to tell everyone that I could. Elon had warned, it's not going to be a good earnings report because they had shut factories down. They were increasing their automation and trying to make their factories more modern and more efficient on pumping out cars. Well, they kind of missed earnings a little bit, but initially on the earnings report, the stock bumped to the upside. Then they had the conference call, and Elon was really bearish, and he was talking about how, number one, the Cybertruck, which I believe the first Cybertruck deliveries are next month in November, but he said it's going to take 12 to 18 months before you see any sort of an add to profitability on the bottom line out of the Cybertruck. So you're not going to see any sort of an immediate, even though they're going to be, selling them. They had so many orders, they're going to be selling so many of them, but it's going to take that long for it to actually hit the bottom line. But then he was also talking about how his fear of rising interest rates was going to cause people to back off on buying cars because the payments are going to be too high. And that meant that they were going to do everything they could to lower the price of Tesla vehicles. And so that compresses margins. So when you started talking about all those things, boy, the stock just tanked. And it didn't do it on the earnings report. It did it on Elon's commentary after the earnings report. And then you can see this massive move to the downside there on Tesla, which is really a shame. I know a lot of people, and I've had people on YouTube. Anytime you say anything negative about Tesla, they come after you. The Tesla bulls are a hardy bunch, but at this point in time, I don't know where the bullish signal is, other than perhaps we're a bit oversold now at this point in time, and you could see some sort of a bounce back up, maybe up to 240 and fill that gap. I don't see much more than that at this point in time, especially if you believe Elon. And I do think he tries to be quite honest with people, even maybe brutally honest at times. But I'm not sure everybody wants to hear what he has to say. But yeah, that's it could have broken either way, but it broke to the downside.
No, I think you nailed that more on the head with what Elon does. He's brutally honest, and he doesn't even care. He doesn't care about the stock price. He never has. So it only hurts people that are trading in and out of this bad boy, because Elon, he's more of a, let's think 40 years down the road instead of what's happening this quarter. So on his quarterly reports, going to throw those things out there, just throw caution to the wind, basically just throw it out there. It is what it is. The only thing that I did notice on that quarterly report when we read through it was they did not sell any of their Bitcoin last quarter. So contrary to what people thought. So I'm happy about that.
That turned out to be a smart move. Bitcoin is rallying again today, moving back to the upside. I'll pull up the chart. It's not going to show the current price, but in the last market update last weekend, which we'll be doing today as well, there was some comments of there was the Chuck Norris references that I get all the time. Chuck's kryptonite is the halving coming up. And then there was another comment from somebody else saying that I have a strong bias towards the upside on Bitcoin and ignoring all the downward moves. And I do have cryptos. I know you do as well, Brandon, but I don't personally own Bitcoin, so I don't have a dog in that fight. I'm just trying to read the charts. And Bitcoin is breaking to the upside when everything else is not. And so I think, you have to look at the charts for what they are. And if we can break above 29,000, which Bitcoin is trying to do right now as we speak, we get above this 29,000 level. All we have is this little bit of resistance around 3031, and then we could be off and running into that halving that's going to occur the first quarter of next year. And so, I don't read the charts based on my own personal thoughts or beliefs. I read what I see on there. And the only comment that I made, I actually went back and watched the recording to say, did I really sound that bullish? But all I said was that, the last bastion of support there is at 25,000. So from 26 to 25,000. And I don't know how you could be bearish on Bitcoin unless it broke 25,000. If it did, then, we could have, we could be talking about a quick move down to 20,000. But as long as it held that level, I felt like you had to be bullish on Bitcoin. That's all I said. And so far, that's panning out. Again, having a nice update today. You'll see that we are going to break above that resistance level today. And next week, who knows? Maybe we are getting ready to take off on another run, which has happened historically every time Bitcoin has had one of these halving things occur. So yeah, I know you're a big Bitcoin guy, Brandon. So good on you for that. I'm sure you're a happy man today.
Right now, I mean, it hit over 30,000 overnight, right? Right now it's sitting about 29.5. Bitcoin's doing pretty well, but like you said, I mean, it is what it is. There's a macro play more so here. I mean, if that spot ETF gets approved, you saw that little blip where Cointelegraph made over $2 million in their little leaked tweet earlier this week, which is absurd. Anyway, there's too much stuff happening in the crypto world to talk about in this concise little moment here. But anyway, Rob, I really do appreciate you coming on the channel today. You covered a lot of stuff, went over a lot of charts. Hopefully you guys got out of it what you needed. That Tesla and Nvidia and those other plays, holy cow. A lot going on, Rob. Anything you have to say before we bounce out of here?
No, other than I think volatility is the name of the game. The VIX is above 20 now, and so I think volatility is going to be here for a while. And that's a stock picker's market when it's like that. So you got to be spot on with what you're looking for, and we do our best here every week to find opportunities. And thanks for having me, Brandon. I enjoy these, and I enjoy looking at the charts and listen to what the folks want to hear. So we'll be back again and do the same thing next week. So look forward to it. Apologize again for the conflicts I had the past couple of weeks, but looking forward to selling back in and doing this with you each and every week. So love your input as well, Brandon. These are fun.
Yeah, thanks again, Rob. We appreciate it. And we'll see you guys in the next one next week. Take it easy.
Take care, everybody.